Hello everybody, welcome back to my channel where we talk all things finance and investing. Today's video, I want to do a bit of a deep dive into Tom Lee, the head of research at Fundstrat, his forecast for the S&P 500 for 2025. You probably saw my video last week where I touched on some of the major banks and their forecast for 2025, but I thought it would be worthwhile doing a video alone on Tom Lee's forecast, just because he's had some excellent calls over the years. He's all around interesting guy, someone I like to listen to when it comes to the markets. So let's get into the video and Tom Lee's forecast for the S&P 500 for 2025. So who is Tom Lee? Well, Tom Lee is head of research and managing partner at FS Insight, FS standing for Fundstrat. He's a regular commentator on all the major news networks, business news that is, and he's also been in the markets and doing analysis for over 25 years. He's been a top-ranked analyst by Institutional Investor going all the way back to 1998. So he's got some pretty serious credentials behind him. And overall, I just find him an interesting guy and an easy person to listen to when it comes to his analysis. Most importantly, he's had some really good calls over the last few years. So all the more reason to do a deep dive into what he's thinking in the markets for 2025. Tom also likes to talk about cryptocurrencies. Not something I mentioned too much on this channel, but we'll get into his thoughts on crypto as well. So how does Tom see 2025 for the S&P 500? Well, as he said it in his own words, he really sees it as a tale of 2 years. He's incredibly positive in the first half of the year, and he's a little bit less positive, I would say, on the second half of the year. So he actually sees the S&P 500 in the first half of 2025 trading all the way up to 7,000. At the time of this video, it's a little over 6,000. But then he sees things start to turn a little bit more negative for the second half, and he sees the S&P 500 ending 2025 in and around 6,600. So that is a very unusual forecast, and not one that I've seen him or anyone else really give, kind of breaking it down into two halves like he's done. He's referred to it as the tale of 2 years or two halves. So let's get into the reasons why behind that. Okay, so a couple of reasons why he thinks the market is going to continue to rally in the first half of 2025 and send the S&P up to 7,000. The first one being Fed policy around interest rates. He still thinks the Fed has got a ways to go, is going to continue to cut rates a little bit, also known as being dovish, a bit of finance jargon to find for you there. And he refers to that as a Fed put. And as interest rates come down, it tends to be good for stocks. The cost of capital comes down, but also the discount rate used to calculate the present value of future earnings, which is all so important for growth companies, comes down as well. So if interest rates continue to come down, you can expect stock prices to go up. So that's one, a Fed put as he refers to it. Another reason why he thinks stocks should have a good start to 2025 for the first half is what he refers to as the Trump put. Now, Trump is going to be president, as we know. He'll come in the end of January. And as a lot of us know, Trump uses the stock market as a key performance indicator for his performance. It's a key KPI for him. So Tom Lee thinks a lot of the Trump policies in and around deregulation, for example, particularly around the banking industry, mergers and acquisitions taking off, things like that are going to push equities a little bit higher because this administration would be very pro-stock market. A third reason why Tom Lee thinks the first half of 2025 will be strong for the equity market. He likes the look of small caps. He thinks that smaller companies in the US have had a really rough go over the last few years. We certainly know they've underperformed the mega caps and the larger companies. They've had to deal with inflation. They had to deal with the pandemic. Last year was a lot of election uncertainty and how policies were going to go depending on what would happen with the US election. But a lot of those things are all resolved now. We're seeing interest rates coming down, and smaller companies are much more susceptible to interest rate moves than larger companies because they tend to rely more on financing than the larger companies do, and they hold less cash. So with interest rates coming down, like I mentioned earlier, US election uncertainty out of the way, inflation much closer to the Fed's target, although it's not quite there yet. But all of these things are leading to smaller companies and mid-sized companies as well in the US to be more confident in the next few years in and around Trump's deregulation rules as well. And he thinks that that's going to be another reason for businesses, which really drives the American economy, to push forward and invest more and ideally have greater returns. Okay, so that explains why he thinks the market will be up in the first half, but what about the second half of 2025? Well, there's a couple of headwinds that he thinks will come into play in the second half of 2025. The first one is in around some of the government initiatives around Trump administration coming in. Things like mass deportations. How would that impact the labor market? Might be positive, it might actually be negative as well if you remove some labor there. Also, the Department of Government Efficiency. They've got a great mandate to make the government more efficient, but what if it's too effective, in Tom Lee's words? In other words, if you cut back on government spending so much, then that could have a negative impact on the economy overall and economic growth. And of course, that would feed through to the stock market. Another reason why Tom thinks the markets might stumble in the second half of the year all comes down to valuations. The S&P 500 is coming off of 2 great years, up over 20% in each of those years, not something that happens very often. Remember, when the markets are valued as they are right now, kind of priced to perfection, as many would say, if there are any stumbling blocks, any hiccups along the way, investor psychology can change real quick and people can run to book their profits, causing the market to come down. He thinks this could happen in the second half of 2025. Another reason he thinks that the markets may sell off in the second half of 2025 is that as we get closer to the end of 2025, a lot of investors will start to think and talk about the end of the business cycle. And when the business cycle comes to an end, you start thinking a little bit more about the next recession. And as we get closer to the end of the year next year, he thinks that a lot of investors will start to position themselves accordingly. So we could have more talk around the business cycle coming to an end, leading into a recession, in which case, if the first half of the year is strong, you may have more investors running to take profits. That, of course, would cause the market to sell off. But he's really only predicted the market to finish up the year at 6,600. So it's not like he's predicting some sort of bear market or absolute crash in the market at all. It's still up from where the market is trading now, just over 6,000. So overall, he thinks it will finish 9% up from where the market is around now. A couple other points he's mentioned in his research for 2025. He thinks it's going to be less about the Magnificent Seven and the Mag 7, as the media likes to call it, and more around some of those smaller mid-cap companies like I've mentioned before. He also likes financials. Financials have really not had a good couple of years here, and he thinks that could change. In fact, there was a report out recently by the Trump administration looking to drastically reduce regulations in the financial sector. So he thinks that that could be very positive for banks. In fact, financials are his number one pick for 2025. So something you can think about if you want to get exposure to a specific sector, like Tom Lee mentions, in financials. You can do that through an ETF or just buying individual shares of companies in the banking sector. So what about Bitcoin? Tom Lee likes to talk about Bitcoin, and he now actually recommends for new investors to consider taking a Bitcoin position up to and at around 2 to 5% of their overall portfolio. I thought that was really interesting. So what's his price target on Bitcoin for 2025? Well, he actually sees it going up all the way to $250,000. And the main reason behind that is a lot of talk around the US government being very pro cryptocurrency, and the US government actually talking about possibly making Bitcoin a strategic reserve asset. And if that happens, he thinks the price could go as high as $250,000. So if you're willing to take the risk on Bitcoin, and it's quite a volatile asset, then you could look at some ETFs and add that into your portfolio. Keep in mind, if you're sat in the UK, it's heavily regulated. So you can't really get exposure to Bitcoin ETFs if you're a UK investor classified as retail. And as always, this is not an investment recommendation on any of these instruments, let alone investing in crypto, which I think is very high risk. Okay, so just to recap, so Tom Lee's forecast is out. He thinks in a year from now, the S&P 500 will finish up around 6,600 for the end of 2025, but he thinks the first half is actually going to be very bullish, with the S&P 500 getting up all the way to 7,000. It's a pretty bullish forecast overall, but he's been known to do that. But when you think about the second half, he actually is a little bit more bearish than we've seen him be in the past. It's a really interesting forecast. Let's see what will happen. At the end of the day, like I've mentioned before, it's very difficult to predict the markets going 1 year out. But Tom Lee has made some pretty good analysis here, in my opinion. If you like the video, click on the like button, subscribe to my channel if you want to get more videos like this where we break down all the moving parts in finance and investing, help you achieve your savings and investment goals. Share the video with a friend, and most importantly, leave me a comment down below. Let me know what you think of Tom Lee's forecast or anything else in the markets. It'd be great to hear from you, and as always, all the best in your savings and investment journey.